Housing associations are good organisations, yeah, they're social purpose driven. The bar generally for ESG, and they've got good governance, the bar generally for ESG is probably quite easy to get over. And I just wondered whether there was a sense that in current funding or the latest rounds of reporting, just whether there's any more challenging coming back from lenders, finance companies.
Yeah, so I suppose I have two thoughts on that. One is, I think what investors are particularly interested in is distance travelled. So I think over time, showing where were you and where are you now is going to be really important. And so for this second round of kind of SRS reports, we're strongly expecting everyone to be reporting, this is where we were last year, this is where we are now, and this is hopefully in future where we're going to be. So I think that's one of the advantages of having a standard that's systematic and consistent, is that people are able to start making these statements about this is where we were, this is where we're going. In terms of the kind of rewards, so yeah, we are seeing there are several kind of sustainability linked loans, sustainability bonds that have been written, and so these are specific instruments that will have, potentially a few basis points of interest linked to certain targets. It might be around number of homes retrofit, changing EPC ratings, number of new homes built. So we are seeing some of these. They're not everywhere, but we are seeing them. I think one thing we also are hearing is that in time, not engaging with ESG, not reporting on this, might come with a bit of a price, increase in price. So that's just kind of a thought. It's perhaps becoming more the default, the expected to have it, and if you don't have it, you might be penalised.
I agree with Andy. What we're seeing is more HAs raising ESG-linked funding, and in my day job, I've recently done a 75 million ESG-linked transaction, which is tied to some of our corporate targets around environmental, social, and governance sort of metrics. And for that, we get a reduced, not major, but a couple of basis points off the cost of funding. But it's really about the travel. That's clearly the feedback we're getting from our lenders.
There are lots more companies who are passing the hurdles of just being good businesses. What that means is then the next discussion, particularly for fund management industry, is saying actually we're going to theme a fund. It's going to be about giving people a home. So the only competition after that is these are good businesses. Which ones are going to give more people roofs over their heads? So actually, there's two elements. Would an investor give? You need both elements. You need to be good at ESG and how you run your business, and you need to be good at delivering people a home. And actually, if there's two equally well-performing ESG organisations and one delivers more homes than the other, and the theme of that investment fund is to get houses built in the UK, which one are you going to go with? It's quite simple, the one that can deliver homes in line with their purpose.